Hi, this is Joseph. Today is Tuesday. It's April 5th. This is a quick update. The New York stock market's about to open up in about 2 minutes or so. I don't make these videos all the time, but as often as I get an opportunity to, and right now things are quite a bit slow, so I wanted to post a performance update. I'll quickly go to, right now we're looking at the Australian dollar. I'll come back to that, but here's the euro dollar. So there really hasn't been anything going on here at this point for me. This was a trade. You might remember this yesterday if you watched yesterday's performance update video. And here is that range. We had that ultra high range bar as support, and then the next level would have been this spring that created this move to the upside last week, and that's the next target zone. And that's pretty much where it's sort of settling down at this point. But over the last few hours, there really isn't anything for me to do here. I'm still watching this one. It may break out and move down a little bit lower. If it gives me an opportunity, I'll take a trade there. Pound dollar, I've taken one trade on this one, picked up 20 pips to the upside. And you can see here, we're sort of traveling, again, in a relatively tight range of consolidation. This is the 1 hour chart for the pound dollar. And there's very few little opportunities here. I want to be very careful. I don't want to hold on to the trades indefinitely. There could be multiple levels of resistance in here, and I'm going to be paying attention to this quickly. It looks like it's creating a range of consolidation. Whether it's accumulation, distribution, we still have to continue to track this one and watch it because there are certain things or certain and specific patterns that need to develop before I can move on to the next phase. So what I do is I analyze the phases of these consolidations. There's phase A, B, C, D. Generally, I don't trade inside of phase B. And when it starts to appear, let's say, into a range of phase C, that's when I start looking for opportunities. Phase D would be the breakout of this range of consolidation. So let's move on. Over here, the dollar yen. I like trading the dollar yen. I've been trading the dollar yen quite a bit over the last few weeks, but lately there really hasn't been anything for me to do here. You can see right here, this is a 1 hour chart of the dollar yen. It's in a range of consolidation. So let me go back over here to the Australian dollar. Now the Australian dollar, I'm up 79 pips right now. And what I'm doing is I'm targeting psychological levels on this break. Now I'm going to explain a few things here with the Australian dollar. Obviously, this is a range of, let me go ahead and tighten this up. This is a range of reaccumulation on this move to the upside here. And I've talked about this several times when I talk about these pushes. It's a concept called pushing through supply. And it's something that you see smart money traders implement very often. And you can track that based on the size of these. You can see we're already moving up to the next target here, which would be 50, 79, 76.50. But what you see here is a quick accelerated move right through this area of resistance or supply. People that get caught going long, they think that, whether they're late to the party or whether they're still holding on to their position, whatever the case, especially if they're late to the party and they jump in here and they think that it's going to be a continuation of that move. There's a few things that happen psychologically. They start to lose interest in their position, and smart money knows this. This is a play that's been going on for 100 years or more, and this is for the inexperienced traders that are holding on to these positions. They start losing interest. This goes on for a couple of days. You can see this is back over here to March 24th. And they start to exit their positions. But those who are holding on to the position, if they get in late, they're hoping to get out of the trade with as little damage as possible. And then that's when we start to see a quick move through this area, so that way it sort of tricks the inexperienced traders into holding on to their position. Smart money does not want them to sell. Smart money wants them to continue to hold on to this position, and then it's a quick accelerated move. And we can gain that, we can identify that by watching how quick and the size of the bars themselves. You can see that there's a lot of activity and there's a greater sense of urgency as we move through that area. That's exactly what smart money wants. Smart money wants the weak hands or the inexperienced traders to go from maybe slightly negative or being negative to all of a sudden being positive on the trade, and then they hold on to the trade. And this is what allows this move like this. So I got into this trade at 75.57, and then I'm going to target psychological levels. Now I'm going to show you my larger time frame trade, and I'm going to explain something in just a moment. So the next level would be 80, the next level would be 20, and you can see all of that happened in that first 1 hour bar. The next level is the double zero. The next level is the 20, and then again the 50. Now let me go to a larger time frame. This is my daily time frame of the Australian dollar. I'm not going to call out a trade. This is not me calling out a trade, but I'm going to explain another concept, which is something that futures traders do. It's a seasonality trade. So there was something that took place back in February, and it's taking place again now in April. And generally, you'll see hedge funds, larger institutions, they'll get into a trade like this, with this one in particular, the Australian dollar, right around the 4th of April, and then they typically exit the trade right around the 14th of April. Now again, number one, I am not calling out a trade and saying that price is going to keep going higher until April 14th. That's what my expectations are. That's what smart money traders are expecting. But you need to manage the position, and the way you do that is to pay attention to the signals and the clues that will tell you when it's going to stall. Now, something that happened back in February, so this particular trade in April works like 15 times out of the last 15 years. So it is a trade that a lot of people will put on and they'll manage the trade. But again, if you get into this trade late, it is your problem, not mine. Again, I am not calling out a trade. I am not telling you to buy. I'm telling you I'm already in this trade. I have another account where I'm taking this trade off of the daily. So again, I'm also going to intraday trade just like you see me doing here. And I can manage this trade a lot further and hold on to these positions instead of just scalping and guessing, which is what a lot of traders do. They don't have specific targets. Now, I also want to tell you that I have a point and figure target that also lines up in this area here. So again, it is something that you can do if you're well informed, if it is something that you can do if you understand and you can read the charts. But if you do not know how to do this, do not just jump in, because I mentioned that there's a seasonality trade on the bigger time frame here with this Australian dollar pair, but you can see it working out really well. So I just wanted to mention that to you, that you have to be well informed. So what gets you to the point where you can gather all this information and take, these seasonality trades and know when they start, and then watching it, and then know how to read the bar charts and know how to use a point and figure and know how to determine when the trade's going to stop, where you need to lock in profits? That's going to take experience. Trading is hard. Again, one of the ways that you can avoid having to spend too much time learning how to trade is just to simply use my trade copier and let me execute the trades for you. So my trade copier subscribers that are using my service are actually participating in this trade right here on the Australian dollar. So the next trade that the next take profit target that I'm looking at is 76.50. It may stall right around 44, 47. If it does that, then I'm going to lock out the trade. I'm going to close out the trade, meaning that I'm going to close out the trade and lock in position the profits on this trade. And then the trade copier is a day trade strategy. Those are the strategies that I use when I'm using and executing trades with the trade copier. They're day trades. Now, again, I can look at the larger time frame and be aware of these bigger overall moves, which allows me to hold on to my day trades a lot longer than, let's just say, scalping and taking 10, 15, 20, 30 pips, which is what a lot of other people do. Again, you got to be really well informed to play this game. You're up against some of the smartest people on the planet. This business attracts the smartest people in this in the world, and you've got to be prepared and know what you're doing so that you can execute appropriately. So so far, again, 79, 80, 83 pips so far on the Australian dollar, and then 20 pips profit on the pound dollar. And this one's going to keep going. If this one breaks to the upside, I might get another opportunity in here. If it pulls back, and then perhaps I might get a second trade on this one. So far we're up over 100 pips so far on this today. With these two trades here, the pound dollar and the Australian dollar. Again, I'm going to keep an eye on the euro dollar. If it holds, maybe it'll give me an opportunity. If it breaks to the downside, maybe it'll give me an opportunity. Either way, I'm going to continue to watch this one. I don't really see anything else developing. I don't think I'm going to get a trade here just yet on the dollar yen, but I'll continue to watch this one as well. So up over 100 pips so far, and I will lock in profits shortly. I've already locked in the profits on the pound dollar, and I'll lock in profits on the Australian dollar.